In this presentation, I'm going to walk you through some of the most important things that I've learned from my 35 years of trading, and I'm going to keep it simple. I'm going to drive toward the things that really matter and the things that you can do in your trading and your investing that'll help you get started and get more profitable right away. As I said, they're simple things, but they took a long time to figure out, and I hope that you find great value in this. All right, here's the itinerary for this presentation. We're going to begin by, I'm going to teach you a little bit about how to read charts. Then we're going to get into the 5 things every stock trader must do to succeed. You can see the little hint at things there. Don't fight a bad mood. Seek surprises. Buy strong stocks on sale, not on FOMO. Plan to lose. Control emotions. I'll talk about the webinars that are coming up through the week. We'll have a very brief conversation about the education and tools that we offer. And then I'll take your questions. So if you have a stock that you have an interest in, then you can put that at the end of the live presentation. Of course, if you're watching this on video after the fact, then you'll have to try to come back for one of those other webinars and bring your questions at that time. All right, so chart reading basics. I'm going to teach you a very quick, easy way to read a stock chart. We're going to start with this concept of inflection points. And then using inflection points, I'll explain the difference between optimism and pessimism and how to see that in a chart. Talk about support and resistance, this concept of price volatility, abnormal activity, and the different phases in a trend. Now, it's something that's a lot easier to understand with a picture, so I'm going to break out my artistic skills and draw a little picture for you. So typically, you'll have a stock that's kind of quiet and boring. I'll show you a stock later in this presentation, which was quiet and boring between $1 and $2. Well, $1 yesterday, $2 this morning. Ultimately went to $60 a share. But it started with this exact pattern, quiet and boring. And then you have the surprise phase, and you have then a pullback phase, which we call the doubt phase. And then we have another break to the upside and a longer pullback sometimes, then a more substantial run up, and then a pullback. And then sometimes you get this compression of volatility and then a further break. So from this little picture, and I'm going to show a real chart to drive this home in a moment. But what I want to begin with is just explaining those concepts that were on the last slide. So the first concept is the idea of inflection points. And inflection points occur at the tops and bottoms on this chart. So if we think about the lows as a bottom, we'll do them in green. We have a little inflection point low here, and one here, and maybe one there, and one over here. So those are inflection point lows. It's the point where price stopped going down and started going up. The direction of the market inflected, it changed direction. And we can say the same thing for the upside inflection points, the little peaks on this chart. And so anywhere that we have an inflection point top, we recognize that as a place where price stopped going up and started going down. Now, I want everyone to think about the stock market as a place where there's a battle going on between buyers and sellers. The buyers are buying because they think the stock is worth more. They think the stock is going to go up after they buy it. The reason a seller sells is they think that the stock is more likely to go down after they sell it. Now, that's not always the case, but generally speaking, that is the case. And so when you've got this battle going on in the market between buyers and sellers, for every trade in the market, there's a buyer and there's a seller. And one of them believes it's going to go up. One of them believes it's going to go down, and one of them is going to be proven wrong. And so what we're looking for is the general direction of that battle. And if the buyers are winning, then price is going to go up because the buyers are going to push price up. If the sellers are winning, then price is going to move down because the sellers are stronger, they're pushing price down. So if we go back to my picture here, if we then look at whether the bottoms are rising or falling, we can define whether there's optimism or pessimism. So here we have a low here, and then we have a higher low here, and a higher low, and a higher low. And the result is we have, generally speaking, rising bottoms on the chart. And then we have falling tops here. And so during that period, generally we had some falling tops, so that was pessimism. So over this period, there was optimism, but in the shorter period, there was pessimism. And we know that because there's rising bottoms or falling tops. Okay, so from that, we can say there's optimism and pessimism. Now, the next concept is support and resistance. Anywhere that there is a floor, we call that support. And anywhere there's a ceiling where inflection points are hitting and bouncing off, we call that resistance. So we've got some resistance here and we've got support here. And those are important levels because at those price levels, based on all of the information that investors have about the company, there is this price that people say is either the maximum price they'll pay or the lowest price they will accept. Resistance is a ceiling price. It's the maximum price that people will pay for the fundamentals of the company. And support is a floor price, the minimum price that the sellers will accept for the fundamentals of the company. And so you'll see then what tends to happen is when price rises into resistance, it gets stuck. And when price falls into support, it will stall there as well. And that's a direction, a place where price changes direction. So far we've got inflection points, which are the peaks and valleys. We've got optimism and pessimism, which is whether the bottoms are rising or the tops are falling. And we've got support and resistance, which are floor prices and ceiling prices. Now, the next thing I want to emphasize is price volatility. Here, we have a lot more price volatility than we have here. Here, we have very low price volatility compared to here. And the simple direction or the simple fact is price is moving up here, price is moving down here, but when price is going sideways, there's very little price volatility. Now, why is that important? Because when there's very little price volatility in that battle that's going on between buyers and sellers, there is agreement about what the stock is worth. There's consensus. And you'll see why that's very important in a moment. And then the last thing is abnormal activity. So when you have this stock that's trading with narrow volatility here, it's in a low price volatility. Oh, I lost my drawing. So when you have a stock that's in this, low volatility and then it comes alive with abnormal activity, what that really means is that there's some reason why investors were willing to pay more than they had been willing to pay in the recent past. We had resistance here, we had support here, and then all of a sudden there's some abnormal price movement as buyers get aggressive to push the stock up in price. And that has meaning because the stock market isn't a charity. People wouldn't pay more for the stock unless there was a really good reason. And it's usually because they have some new information. There could have been a news release that came out. There could be a rumor. Something has investors excited enough to buy the stock and pay more than they had been willing to pay. And so what we'll find when we look at examples in a moment is you're going to see stocks that are boring. They come alive with abnormal activity, and then they start to trend upward. So let's take a look at some charts. Here is a stock that's done really well over the past few months. And let's emphasize what we've talked about so far. So begin by finding inflection points. So we have some inflection point tops. Anywhere there's a peak, that's an inflection point top. And then we have some inflection point lows. Anywhere there is a little valley, we have an inflection point low. And we're curious or we're interested in whether the bottoms are rising or the tops are falling. And so if I drew a few more on here, we see that the tops are falling here. So during that period, there was pessimism. And then we had a period when the bottoms were rising. And so during that period, there was optimism. Now, let's take away all this markup and draw some lines on here again. Next thing I want to emphasize is resistance, which was here. You can see that there was inflection point tops, and it's an art, not a science, so it doesn't have to be perfect, but we could draw a horizontal line across those tops right around $2.35, $2.40. And that represents the maximum amount that people were willing to pay for the stock, going back many, many months. We can also see that there was optimism building because we had a bottom that was rising. We had relatively low price volatility because the stock was in a narrow sideways trading range, which means that the buyers and sellers agreed that that's what the stock was worth, somewhere between $1.90 and $2.30. And then one day we had abnormal price movement breaking through resistance from optimism, from low volatility, and that started the upward trend. So I've just really emphasized how you pick stocks that are going to beat the market. By understanding these chart basics, you can pick stocks that are going to do well. Now, there's a little more to it than that. I'm just giving you the basics at this point, but we're going to elaborate on these things, and then the webinars I do through the rest of the week are going to get even more in depth. We're going to look at the longer term investor on the next webinar on Wednesday, and then the sort of short term day trading, swing trading approach. We're going to apply the same principles, whether you're a day trader or a long term investor. The principles are the same. Whether you want to hold a stock for 20 minutes or 20 months, the principles are the same. You just apply them to a different chart. And the chart we're looking at here is a daily chart. So this would be for a position trader, someone who is, putting this stock in, their retirement portfolio, that sort of thing, looking for the abnormal break from low volatility, from optimism through resistance. And I've been teaching these concepts for 25 years. Nothing has changed in this regard. We can get a little more sophisticated with our tools along the way, but this has been working for as long as I've been a stock trader. I've been trading the stock market for 35 years. All right, so let's look at another example. Oh, I thought I had another example. We're going to come back to some other examples in a moment. So the first of our 5 things that you must do is don't fight the mood. Don't fight the mood, or don't fight a bad mood. And so really this is don't fight against pessimism. When we buy stocks that are in downward trends, we're fighting against a negative sentiment among investors. And we have to be very careful about doing that, because when you fight against pessimism, it's a lot like trying to paddle a canoe up a river. Now, it can be done, but it's not easy. And you're much better off to buy optimism. And optimism has, as we just reviewed, rising bottoms. Pessimism has falling tops. So we want to avoid pessimism. Now, I created an indicator to help us see the difference between optimism and pessimism, because I recognize that not everyone has experience in reading stock charts. So what I did is I took the elements of chart patterns, those 6 things that we just talked about, which again, support and resistance, optimism and pessimism, price volatility, and abnormal activity. So I took those 6 things and I put scores on them. So if a stock has optimism, it gets a positive score. Everything starts with 50 and we add points for optimism. We take away points for pessimism. So if there's falling tops, we're losing points. If a stock makes an abnormal move to the upside, that gets some positive points. If the stock makes an abnormal price move to the downside, obviously negative. And so I have this scoring model called a stock score. You can get that at stockscores.com. And you can see what the stock scores are for your stock. And they're very useful for position trading. Now, we don't use them for day trading or swing trading. We have other tools for that, which I'll talk about on Thursday. But for position trading, we have this wonderful tool called the Sentiment Stock Score, which will help us stay out of bad stocks and focus on the good ones. And simply, if you want to sort of focus on the best stocks, having a Sentiment Stock Score of at least 50 is what we want. Now, higher is better, but not so much higher. Like 60 is kind of the threshold that I really prefer, and 50 is even better. So I'm just jumping ahead of my charts here. Now I have to just get my drawing tool. There we go. Okay, so now let's talk again about fighting against the mood. So this is a chart of Meta, which is Facebook. And let's start by identifying the inflection points. So we have inflection point tops here, and they're generally falling, which you should know is pessimism. And then we make a low here, and then we start building rising bottoms, which is optimism. Now, I want everyone to notice this is a weekly chart. So this is a very long-term chart. This is a 3-year weekly chart of Meta. So back in November of 2022, Meta was trading at $100 a share. Today, a little over, well, basically 2 years later, it's trading at $600 a share. And there was a point when this stock was a good buy. It happened when the market switched from pessimism to optimism and then had this abnormal price move through resistance from some rising bottoms. You can see that that price move that week was very tall. You can also see that the volume was stronger, and notice that the sentiment stock score, which had been below 50, crossed above and was now in optimism territory. It was above 50, and really, again, 60 is even better. And look what happened. The stock went up, and through that uptrend, it was always above 50, except right here for this little short period when the stock was not doing very well. And again, more recently, we had resistance here. We had optimism. We broke out from sideways trading, from low volatility, broke out just 4 weeks ago at, I don't know what it is, about $560 a share. Now it's at 600. So it's been slowly moving up over the last 4 weeks. Okay. Let's look at another example, CRVS. Again, we don't want to fight against bad moods. So the bad mood on CRVS is here because there's pessimism. And then it's neutral because it's sideways, but the bottoms are rising. So we're starting to build optimism. And then we broke through resistance from optimism. That's a place to buy. We do not want to buy when we have this break up here. That's abnormal price movement, but it's moving up into pessimism. So that's no-go. Here we're breaking from low volatility through resistance, from optimism, and up we go. All right, so the next of our 5 is seek surprises. So the stock market isn't fair. Some people get better information than others. And when they have new information about a company's fundamentals, about something positive, they will go into the market and buy aggressively. And they will create the abnormal activity that moves the stock from low volatility, boring sideways trading, into excitement. Okay, so we want to look for surprises in the market, stocks that suddenly behave abnormally to the upside. They make an abnormal price jump because that indicates that someone has some new information. And they're often the opportunities that don't make sense, because you see a stock that jumps up, 8% all of a sudden, and there's no real reason. Well, it can often be because someone knows some information that is not yet widely known. And so when a stock shows strength with strong volume, there's basically some investors who are buying on that new information. And as more people learn about that new information, more people will buy the stock, and that's what's going to send the stock into an upward trend. Now, I created an indicator called the Stockscores action candle, which looks for abnormal activity. So the Stockscores action candle looks for abnormal activity. We can do it to the upside or downside, but we prefer the upside. And it's an algorithm that just seeks abnormal price and volume activity. I'll show it on a chart in just a minute. And these good opportunities exist when this abnormal activity comes from low price volatility. So here we have a fun chart. This is DJT, Trump Media. So this is the company that owns Donald Trump's social media platform. It's called Truth. And this stock started to move up about a week ago. Right here is the abnormal activity. Now notice that this chart looks just like any other chart, except it's a 30-day, 60-minute chart. So it's much more short-term. Each one of these bars is 60 minutes of trading. So we do something called swing trading, where we are in and out within a week or two. If you want to be a swing trader, this is the chart that you can use. You can use a 30-minute chart, a 15-minute chart. My preference, what I do is I use a 13-minute chart. You're probably asking, why would you use a 13-minute chart? Seems like an odd number. I do that because a 13-minute chart has 30 13-minute bars in a day. So 13 times 30 is 6.5 hours, and the trading day is 6.5 hours long. I just like the symmetry of 30 13-minute bars in a day. There's 13 30-minute bars in a day. That also has symmetry. So either one I think is good. So what's important? Well, the stock had what? That was pessimism, right? Because there was falling tops. And then it broke the downward trend. So that's breaking the pessimism. And then it starts to build rising bottoms. It builds low volatility here. You can see it was going sideways. That's only 3 days, but for 4 days. 4 days it's going sideways. There's optimism, and then there's abnormal activity with abnormal volume breaking through resistance from optimism. Now, I have a service that I run every day called Active Live. And in Active Live, one of the things that I do is find swing trades like this. And so at 9:43 on, I don't know what day that was, October 7th, I highlighted this stock as meeting the requirements of my swing trading strategy because it made an action candle. I'm going to show you this on the next slide, what an action candle looks like on a chart. It made an action candle through resistance from optimism with abnormal activity, and up it went. And since that time, it's gone from around $18 to, it just fell short of $34 today before it had some selling pressure at the end of the day. And in fact, that selling pressure at the end of the day broke the upward trend line, giving a sell signal at around $31, $32. Now you can imagine if you can find stocks that you can buy at $17, $18 and a week later sell them at $30, $31, that's a really nice profit. Now, I don't know anything about DJT and Trump Media. I know that what it does, but I don't know anything why that stock would go up. But the people that know the most started buying that stock aggressively, pushing the stock price up. And it may be, as I talked about on a radio show on this past weekend, it may be that that's just Trump doing better in the polls. So what I did after the fact is I went and looked at the polls, and in fact, he has been making gains in the polls in the swing states where he's probably picked up 1 or 2 percentage points in just the last week or two. So the market discounts that information immediately. I only learned about that information after the fact. The market told me that that was happening when it started to move up right there with abnormal activity through resistance from optimism, sending the stock up. And so you don't need to know anything. You don't need to be an expert on anything. If you learn how to read a chart the way I've shown you, you can predict which stocks will do well. Doesn't work 100% of the time. I want to be clear about that. It's a probability game. We're trying to do things where the probability is that it will work for us, but there will be losses. It's inevitable. 3, 4 times out of 10, I expect to be wrong. But if I can be right 6 or 7 times out of 10, and if my average profit is double my average loss, then you can really start to make good money. And you can see that. And that's the sort of the economics of trading, which I'll review in some of the other lessons later in the week. Now here's the same stock, DJT, but this one is done in a program I use called TradeStation. And this is where I have my action candle indicators. So you can see here these pink dots on those candles. So that's when the stock fired the action candle. It triggered my action candle indicator. And as I said earlier, I have a service that I run every day called Active Live, where I am looking through the entire stock market for stocks making action candles. You look for action candles on 2-minute charts, on 1-minute charts, on 13-minute charts, on 30-minute charts sometimes. And it's a clue that there's something going on. And in this case, the volume increased, the price increased, something was happening. I had no idea what. I just said, looks like a good buy here. And true enough, stock did quite well. All right, so what's our next one? Buy strong stocks on sale, not on FOMO. Now, first of all, what is FOMO? You've probably heard about it before. It's the fear of missing out. And it's one of the things that is most destructive to traders and investors. It causes people to chase stocks higher and pay too high of a price. And if you have FOMO, in the long run, you're going to lose in the stock market. So what I want to show you next is a way to buy strong stocks on sale, one of my other strategies, rather than buy them on the fear of missing out. So the more the stock goes up, the more we humans tend to believe it will go up. You know, when a stock is in a boring sideways trading pattern, nobody cares. And when it first jumps up, people sort of doubt the strength. But when it goes up a lot and it's already way up here and it's made these massive gains, that's when most people are interested in the stock, because the upward movement, the big price gains, is what creates interest among investors. And this is the worst time to buy. That's the FOMO period to buy. We want to buy here when it starts or when it's on sale. And that's what I'm going to show you next. What we want to do is find stocks that are making pullbacks in upward trends, as opposed to chasing stocks when they run away from their upward trend. So let's look at an example because it's always easier. So here we have resistance, rising bottoms. So we have optimism. We have abnormal price action. So this is where we get our first signal that that stock is a good one to buy. This was a stock today that did this. So you can buy that, or you can wait for the pullback and the break of the pullback, which is how we buy strong stocks on sale. We look for stocks that have pullbacks and upward trends, and we buy the break of the pullback. So that's another strategy. Now you have to have some tools to find these things on time. Those are some of the things I'll talk about later in the week. For now, let's just keep it simple. We're buying a strong stock on the break of a pullback. Now, when do most people buy? They buy up here. When the trend goes parabolic, you have people chasing the stock higher, and that's when most people are buying. And if you doubt that that's the case, look at the volume. The highest volume was at the top. That's when most people were acting. And that was the top in the stock before it started to go down. This is the FOMO traders. And unfortunately, these are the losers. The smart people are buying either here, it's supposed to be a happy face, or here on the break of the pullback. Happiness. Don't be a FOMO trader. Don't chase parabolic trends. Here's another example. And this is a different style. This doesn't have the parabolic trend. This is a stock that's in a long-term upward trend. When price runs up and away from the trend line, it's going to come back to the trend line. So here you can see I've started with inflection points and I've drawn a line across them. And we can see that when price runs away from the trend line, it pulls back to it. It runs away, it pulls back to it. It's those pullbacks that create the trend line. Here it runs away. FOMO is happening up there. And we know that because price is far above the trend line. And therefore, it's likely to pull back to the trend line. And when it does and bounces off of the trend line, that's a buying opportunity. I call that a pullback play. And I've got a scan on my Stockscores website, market scan tool, again, a tool that I'll show you tomorrow in tomorrow's webinar, where we can look for stocks like that are in upward trends. They have good stock scores. You'll notice the stock score indicators are very strong here for that entire upward trend. And we wait for them to run away from the trend line, pull back, and break the pullback. Run away, pull back, break the pullback. This is the time to buy, not up here. This is the time to sell when they run away from the trend line and hit the top of that channel. All right, so that's how we buy strong stocks on sale and avoid the fear of missing out. Next of our important rules is plan to lose. No trader or investor is right all of the time. It's essential to take small losses when the market proves you wrong. But simply having a stop loss point is not enough. We should all use stops, but most people don't set their stop losses at the right point. We need to set our stop losses at a price level where the market established a floor price. Remember at the top of the video, I talked about support. We always want to set our stop loss point just below the floor price, just below the floor. So if we look at our chart here, where are the floors? Well, when we buy this breakout, we have a floor here. When we buy this pullback break, we have a floor here. These are the places where we are going to plan to lose. And if the stock falls down through that floor, we're going to get out. As the stock moves up, we can keep moving our floor up. When trends go parabolic like this, I like to put my floor at the bottom of the tall candles. And so in this instance, the sell point was there because it broke through the floor of a tall candle in a parabolic upward trend. That's a very quick overview of one of my selling strategies. We'll go into that a little more detail later in the week. Now notice we have a floor here. It hits it once, hits it twice. When it breaks through the floor, it goes down. So floors have meaning. Floors are that psychological barrier where the market has said, based on all of the information that we have about this stock, we don't think the stock is worth less than this price. And then when we break down below that, it's an indication that something is wrong, that the sellers are stronger than the buyers. Here's another example. If we buy this breakout here, there's our floor. If we buy this breakout, there's our floor. If we buy this breakout, there's our floor. And you'll notice that the floors keep rising. And so even today, there's still no reason to sell this stock because we haven't closed below a floor. Notice on this day, we went through the floor during the day, but we did not close below the floor. Some of you may know about candlestick charts. The fact that there's this tail here means that the stock traded below that floor during the day, but it closed above because that's a green candle. If you want to learn more about candlesticks, I've got lessons about that on the Stockscores website. We can also define a floor just by the trend line. So if a stock has an upward trend line, as long as it holds that trend, it's holding the floor. All right, the next of our important rules is control emotions. And this is the hardest one. Most traders have an emotional attachment to money. They like to make it, they hate to lose it. And this causes emotion to enter into trading decisions. Emotion clouds our judgment. It leads us to make mistakes. Anyone can learn trading rules. I can teach you the rules of my strategy in 10 minutes. I've got a dozen different strategies. So if you wanted to learn them all, it's 2 hours of effort. But overcoming emotion is what challenges most people. It takes time, and it helps to have the support of someone experienced through that process, which is something that I provide. But most importantly, if you want to control your emotions, there are two things you must do. Not take more risk than you can tolerate, and have a well-researched trading plan using strategies that you believe in. If you can do those things, then you're well on your way to success. So throughout the video, I've been talking about more webinars that are coming. So tonight is kind of a theoretical overview, and we're then going to get a little more deep into investing tomorrow on, if you're watching this on video, it's going to be Wednesday. And then we're going to go into day and swing trading on Thursday, and then tools and education on Saturday. So if you want to learn more about those, what tools I use, the theories behind what I do, how much time does it take, how much money is required to do these things, how can you learn my strategies, how can you use my tools, make sure you register for some of these. I know most of you are probably already registered for this, but Wednesday, we're going to do investing. Thursday, we're going to do day trading and swing trading. And then Saturday, tools. Now, I want to show you very quickly the Stockscores Education Center. We're not going to spend a lot of time on this because this is something we'll do more so on Saturday when we do that presentation on tools. But I have an online training center. If I go to trader training on stockscores.com, go to Education Center, you can see that there's all these lessons here. There's the investor section, which are investor strategies, foundation section, which is all our theory, and then active trader, which is active trader strategies and how to use TradeStation, how to use some of my indicators. So we have an investor course, which teaches you how to invest, manage your money, manage your retirement portfolio. You get email support from me, you get access to my tools. I'm going to focus on that tomorrow. Active trading, you get access to my active trading strategies, email support from me, access to my indicators. We'll talk about that on Thursday. Active Live is a service that I run every day. It is my real-time analysis of the markets. I call out stocks. I make a watch list of stocks. The hottest stock today was DRUG, which was one that I had on the watch list yesterday and today because it fit the requirements. It was behaving abnormally with strong liquidity. It had a low float, so it fit one of my strategies, and it was a monster mover. It was yesterday, it was $1, and it hit almost $60 in the aftermarket today. So that's, what is that, 6,000%? During the day, it was only 2,000%, so it just kept on going up even more. Now, I'm going to start taking questions in a moment. I know a lot of you have already been asking questions, but I will come to that in a minute. I'll just leave this up for a minute. This is just some a testimonial, I guess, from one of my students. And I'll leave that up. If you're watching this as a video, you can pause it. I don't want to spend too much time on this. Now, someone asking how you register for the other webinars, just go to stockscores.com, go to the homepage, and go down here to upcoming events. And there's all the links there that you need. So if you want to register for tomorrow, if you've already registered, you don't need to do this again, obviously. And just click on more info, and you can register right here. Okay. All right, so I'm doing live training in November. I'm going to talk about this more on Saturday, so I'll just go through it very quickly. So I do live classes for a couple hours, well, 3 hours, Monday, November 4th and Tuesday, November 5th, an hour and a half each night. That'll teach you the theory. Then we're going to practice Wednesday, Thursday, Friday. For the active trader students, they will get a free month of my active live service. And if you register for that class before Friday, October 25th, at 11 p.m. Pacific time, you're going to get all these overview classes for free. Again, I don't want to spend too much time on this tonight because I want to get to questions. We've got lots of questions coming in, but I'll talk about this more on Saturday. But this is really the path to learning what I do and start making money using my strategies. Here's the cost. This is all Canadian dollars. I think at the next presentation, I'll put this in US and euros because I know we have people here from all over the world. So Canadian dollars, if you're in the US, it's much less for you because your dollar is strong right now. And here is a discount code. So if you want to save $500 off either of the courses, the Active Trader course or the Investor course, here are the discount codes right there. So at checkout, you punch in those codes and you can get a $500 discount. The mentorship, you can't register right away. I'll be giving more information on that on Saturday. If you're already a student, you can upgrade. I'll talk about more about that on Saturday, how to do that. If you have any questions about the course, start by going to this web address, stockscores.com/learn, or just do this. Go to the Stockscores website, go to Trader Training, learn how to trade, and there's lots of information about the two courses. I will get deeper into this on Saturday. I'm just going to touch on it briefly tomorrow and Thursday, but this is where you have all the information, and this is where you can order the course. If I click on Active Trader, I can then enter in the discount code, click on this button, and what was it? ITA 500, I believe it was. Apply discount. Maybe I got that wrong. What's the code? 500 ITA 24. Huh. Don't even know my own discount codes. ITA 24, apply discount, and it takes $500 off, and then you do checkout. You'll have immediate access to the online material. You'll be able to get access to the live training that I'm doing later, well, right at the first week of November. And then you have my support as well through the process. I give my students a ton of support because I only teach about 100 people a year. It's a small number of people. I'm the only one that does the teaching. I'm not a big company doing this. I enjoy teaching. I've been doing it for 25 years. But I can't do a lot of people because I just don't have the time. So I pick a small number of people every year, and if you want to be one of them, then you know the path. All right, so let's do some stock questions now. Oh, first, go ahead and start typing in your questions. I'm going to just launch a poll because from a marketing standpoint, I don't like to bug people. So if you would like more information on these courses, please answer the poll as you see on screen right now. Now, if you're watching this as a video, the best thing to do will be to join us for one of the other webinars this week so you can answer the poll, or you can come to the Saturday webinar and you'll learn more about the courses there. That'll probably be the best path. You can also email me. My email address is tylerb@stockscores.com. But I'll leave this up for another 30 seconds or so, give everyone an opportunity to answer. If you don't want me to send you an email with information about the courses, just say no. You're not going to hurt my feelings. I always have lots of students. It's I don't like to push things down people's throats. So I've been teaching for 25 years, and I guarantee that you'll learn a lot and be well on your way to doing better in the market from this. All right, so I've got some lots of questions here, and it's going to be tough for me to answer all these, but I'm going to do my best. So first question is a recording of tonight's webinar available? Yes. So I will email that out after, well, probably late tonight or tomorrow morning. I have to compile the video and do all that kind of thing. I'm going to take down this poll now, if I can remember how. Polls. So we will close that. So 10 more seconds, and I'm going to take down the poll. And 3, 2, 1. There we go. Okay. Well, one other thing, I have a YouTube channel. I know most of you are probably on my YouTube channel already, but if not, go to youtube.com, search for Stockscores. I do at least one video a week. It's free content. You'll learn lots from it, and that's a great way to get started. There's my contact information. If you have any questions, if you want to be included on the email list to get updates on the course coming up, then you can email me there, tylerb@stockscores.com. All right, so let's do some questions now. I'm going to jump into the Stockscores website. I'm going to delete this because I don't need to do that. And someone asking, what do I think about Lucid? LCID is the symbol. We'll do a few stocks. I got lots of general questions. I'm going to do my best to answer as many as I can. So I'm going to look at this on a 3-year weekly chart. And you can see that Lucid, which is an electric car company, was way up here at $55. And it's been in a cycle of falling tops for a number of years. So through all that period, it was pessimism. And through all that period, for the most part, the stock scores were below 50. There was a brief point here when they were a little bit above, but there was no breakout, so we never had a buy signal there. So really the stock scores helped keep you out of this stock. Now, in the last few months, we've seen the stock start to do a little better, so I'm going to zoom in on this a little bit, make this a daily chart. I'm going to go, let's say, 1 year here. And what you can see is that the cycle of falling tops has started to give way to a cycle of rising bottoms. And it's pulled back to the trend line where it should bounce. So if you are in this stock, then I think it's something to still hold. I don't like it as a buy signal unless it breaks this pullback here. So if it can break this pullback and bounce off of the trend line, then it probably moves up to 4.25 or so, and then it'll get stuck. I don't think it's a great looking stock. You can see the stock score is 50. It's okay, but it's not outstanding. So that's a quick bit of analysis. What Canadian S&P 500 ETF stock do you recommend for long-term investing? Geez, I can't remember what the symbol is now. It's the most liquid one. You know, that kind of question is best answered by Google. So if we go Canadian, because there's one that's hedged to the Canadian dollar, or the US dollar rather, Canadian S&P 500 500 ETF. Just got to remember the symbol. I'll know it when I see it. XSP. So XSP for Canadian, no, I think that's it. Let's just take a look here. T.XSP. There it is. So this is hedged to the US dollar, so it takes out the risk of the currency factor. And it's, you can see, been doing very well. We've got a pretty strong stock market. So that's good. Okay, I want to do some of the general questions first. Can you share an example of a major market shift you've experienced, and if how you adapted your strategy to navigate it? So of course, when we had the COVID crash in, well, let's just pull up the chart here and I'll show you. It's always easier visually. So let's pull up the S&P itself, SPY. We're going to go back 5 years. So right here, we had a very dramatic shift in the market. This was when COVID hit. And that was just a strong reason to sell when it broke the upward trend line. So that was the shift, because the stock market had been fairly strong going into that. But out of that, we also got one of the best bull markets that I've seen in my career. We had this sharp sell-off. We broke the downward trend line, a few weeks later, maybe 2 months later. And then we went into this incredibly strong upward trend as stimulus from governments put a lot of money in the stock market. And it's very simple. If you want to be a good investor, hold the market when it's in a rising bottom situation. When the upward trend is broken, this is early 2022 when interest rates started to rise, you got to change your approach, go negative. And then when it broke the downward trend and started building rising bottoms, that was the signal to go long again. We had a short little blip here at the end of the middle of 2023, and then broke the downward trend up again. And we've been in a strong upward trend ever since. This is one of the things I do in my weekly videos on YouTube. So the best thing to do is watch those because I'll tell you what I think as it happens. So question, what's your general mindset regarding events like earnings? A great example is ASML today with a big drop and missing expectations. Do you anticipate that kind of news at all? Well, we can look at that stock specifically. I don't own stocks unless I see a good chart pattern. And here's the thing, there's no reason to own this stock because it moved from optimism to pessimism. And it's been in pessimism ever since. See how the Stockscores fell out of bed there? So there was no reason to hold that stock into earnings. If we go back a little farther on this, we could see the big picture. Yeah, so this stock actually had a pretty good run here. It broke the upward trend line at $1,000, and it's been a stock to avoid ever since. Look at the Stockscores, 38. They fell down, 3 months ago. So I don't try to be smart. I don't know anything about this company. Really couldn't care less. I just follow what the market tells me to do. Would you please run through the parabolic and stop loss concepts on a stock like Sophie or PLTR? Okay, I'll try to. I have to pull up the chart. Okay, so great example. This is a parabolic move. So first of all, PLTR went from pessimism to optimism. It broke out from optimism. Support was here, it never closed below support. It did go below support briefly. And now the linear upward trend is starting to steepen, starting to go parabolic. So there's no reason to sell yet, but it is a stock where I would say you dance close to the exit door. Here's the 3-year chart. You can really see the parabolic trend here. See, draw this with my line tool. It's linear and it's getting steeper and steeper and steeper. And so right now, if it started to move below $40, I'd hit the exit button. What's the difference between signal and sentiment on your website? So I've had quite a few questions about the Stockscores. That's a bit longer presentation. What I suggest you do is go to Trader Training, how to use the Stockscores, and it's all explained here. Okay, it explains the signal, Stockscore, sentiment, Stockscore, it's all there. So I encourage you just to go look at that so we can not spend too much time. How do you find stocks for swing trading? I have tools. I'm going to show those tools on Thursday for swing trading and also on Saturday. So just bear with me and come back for those webinars. I will show those then. Is there still an entry opportunity for DRUG? I was planning to get in last night, but fell asleep. I was kicking myself this morning. Yeah, I bet. Obviously, I'll show this chart here. It's a stock that's just had such a monster move. And you can see here, this is just the daily chart. It was at $1 2 days ago. It hit 38. It actually hit 59 in the aftermarket. I would not buy this stock now. I think it's something that you could possibly day trade tomorrow. But here's your linear trend. I got to draw that better. Here is your linear trend line. And see how far above the linear trend line it is right now? That makes it risky. Now, I'll tell you the buy points that we did today. And again, this is a stock that we were trading in my active live service. I'm going to go to the 1-day chart. So the first signal was at 933 when it broke from low volatility. It's really hard to tell because the scale is so stretched. And then we had a strategy break here called an intraday pullback, which is one of my strategies I teach. I'll talk about that on Thursday. There was another intraday pullback here. It wasn't as good a setup. We had another intraday pullback break here. Remember I talked about not chasing strength, but buying, not having FOMO, not buying it up here, but waiting for the pullback. So as of now, I would not buy it, but that doesn't mean I won't, see a buy signal tomorrow. Just realize it's very, very risky. And there's a very good chance that this company will announce financing. Often when stocks make these big runs, they do what's called a shelf filing, where they've got a financing ready to go. They actually sell shares into the market, and then announce that they've raised $50 million by issuing new shares. And when they do that, the stock usually falls quite sharply. It happened with GameStop during the summer. And you have to always be wary of stocks that make these big runs. I do not want to hold a stock like that overnight because I don't want to get sucked into a situation where I have one of these shelf filings that can really hurt the stock. Recently, you did a video on float. What ratio is considered a low float? It's not a ratio, it's number of shares. So to me, anything less than 20 million shares has a low float. DRUG has a float of 2.4 million, I believe, 2.6, something low like that. And that's one of the reasons why I can do so well. Do you use options for any of your strategies? I do not, but many of my students do. And certainly you can use the leverage. You just have to really know how to apply that. Gosh, there's so many questions, and I apologize. There's no way that I'm going to be answering all of these, but I will, obviously do some more presentations through the week, and I'll try to do more. How do you deal with market disturbances like today with China backing down from stimulus? I don't care. Like, I just follow the chart. If there's a sell signal on a stock I own, I sell it. And if it's caused by China, so there's a couple of ETFs. I think it's called Yin and Yang. So this is the bear ETF on China. And China, this bear ETF, yeah, it went up today, but here's the stimulus. So the reason this went down is because it's an inverse ETF. I think the other one is Yin. I thought I punched in right, maybe not. No. What is the other Yin and Yang? I can't remember. There's another Chinese ETF that goes up with the China market. If anyone remembers, let me know. But anyway, you never know when there's going to be a surprise. You just have your discipline about how to trade and what to look for, and go from there. All right, I've got another stock question here. And someone asked me about Bedford Metals, sir. I don't know the symbol, so if you know the symbol, let me know. Hi, should I buy IM Gold now, or is it too late? I can't tell you what to buy or sell. I can only teach you what to do. I would not, I think IM Gold is IMG. Yeah, I just didn't type it right. Would I buy it? Well, let's go through the analysis. So first of all, it's in an upward trend. When did that upward trend start? It started here with this abnormal break. So we had rising bottoms on the weekly chart, resistance right here, and it broke with abnormal activity. And then you don't want to chase FOMO, right? So bad here, pull back, good. Pull back, good. Now it's run away, it's pulling back, and it may break the pullback here. It's not quite done it yet. I think you could watch it, and what you want to do is watch the daily chart. This is a weekly. So I'm going to go to the 6-month daily. And if I draw a line across these tops here, you can see that we're still below the trend line. It's quite volatile, so I think it's difficult to predict. Even if this broke this pullback, I'd be a little cautious still. So to me, there's better opportunities. If you're in it, it's a hold, but I don't think it's a great stock to rush out and buy. Okay, EVGO, is it time to sell? I bought based on your recommendation. Thank you. Now I'm up 86%. Well, I'm glad to hear you have enjoyed that trade. This is one that I put on my YouTube channel, and no sell signal yet. So I featured it on YouTube, I think around in here somewhere, maybe here. And yeah, 86%, so it's 4.5. Yeah, that makes about sense. It's had this great run, no sell signal yet. What I would do on this one is watch the intraday chart. So I'm going to go 1 month, 60 minute. And you can see here the rising bottoms, right? And as long as it holds those rising bottoms, as long as it's building this pattern, it's okay. If it started to move down through 7, I'd be concerned. And if it breaks out through this 760 range, which it looks like it wants to tomorrow, I think it's going to continue higher. So I would hold for now. Okay. So someone asking how you avoid round tripping being up 20, 30% and then losing it all. You got to have a selling strategy. And that's something that I teach. We don't have time to go into all of that tonight. Do you have any specific methods to evaluate the intrinsic value of the stock to understand if it's undervalued or overvalued? I do not, because I don't really think that I know enough, and neither do you. None of us have enough information to do that. People that run big hedge funds, they have access to information that we don't have, and they're the ones who can really do that in-depth fundamental analysis. The good thing is when they act in the market, they tell us what they're doing. And all I do is follow what the big money people are doing. My whole approach is based on following what the most well-informed investors are. So I don't know why I buy stocks. When EVGO was giving this pattern, sorry, I'm trying to find my mouse here. If we go back to the 6-month chart, I picked EVGO in here because it was breaking from low volatility. This was driven by people that had information that was not widely known. I have no idea what caused that. I don't care. In fact, I don't even want to know, because if I know, then I fall in love with the story. I don't want to fall in love with the story. So I buy here, and I have it planned to sell if it goes below here. It never did. And it's now up, whatever, 70, 80%. Okay, I think we're going to wrap it up pretty quick here. FXI was one of the Chinese ETFs. Thank you. There's another one, but that's good too. So someone asking, well, how do you respond to this? Well, if you bought when it broke right here, and you had this great upward move, and then it gapped down a week and a half ago, you just get out. So it doesn't work out as great as it could have been. You're buying at 30, you're selling at 33.5, but it's better than now being, at 31. So I just have an approach, a set of rules that I can teach you for when to buy, when to sell, how to manage risk, how to find the process for finding trades. All of that is what I teach in my courses. And those are the things we're going to get into in more detail through the week. So make sure you're registered for those webinars as well. I'm going to wrap it up for tonight. I hope you've enjoyed this, and look forward to seeing you at the other webinars. Make sure you're subscribed to the Stockscores YouTube channel. And if you're watching this as a video, click the like button. It always helps it get more views. I'll see you on Wednesday for the next presentation, and trade well.